Yo, 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 what's up, where everybody at? What you doing? Hopefully everybody joining, got the Zoom link. If you ain't got the Zoom link, you better join me right now. It's about to go down in a few minutes. Let's go. Let's go. We about to get it popping. What's up, Monte? Yo, what's up, man? We about to get this this trading terminology down real quick. Gonna go over some Forex basics. If you're already in a private group, you already got the link, right? So I'm about to see y'all on in a second because this is gonna be solely on Zoom because streaming it on Facebook just ain't gonna cut it, especially with what I'm trying to do. So y'all definitely better link right now, DM me so you get in a free private group and you get access to the recording if you can't catch it live, y'all. So let's go. Let's get this ball rolling. Y'all know what time it is. Time to get things popping. Okay, KK, we about to get this ball rolling, y'all. I appreciate everybody who's on right now. Let me get this YouTube up out of here so we can get this ball rolling. I'm gonna come back to this chart in a second. But first thing that I do want to do, let me stop the screen share real quick. Let's talk about it. Ooh, payday, 70-30 rule. Kind of glad that popped up also. And the reason being, let me share my video. Give me 1 second, y'all. Let me share this video so y'all can see and talk to your boy. But first thing, before I start anything, before you do anything, you want to start off on a positive note. So affirmations are so important, especially for me when it comes to the money game. I like to, just say certain things to myself. And this is basically how it goes, how I started. You know, I basically say, hey, I am a money magnet and money loves me. Okay. I am a money magnet and money loves me. Okay. And that's so important because, hey, what I'm just doing right now, I'm manifesting, you know, that income and that those profits to come my way. Although there are no guarantees in the market, guess what? Hey, you sow good, you reap good. You sow bad, you reap bad. You don't sow, you don't reap. So it's important that we sow, and sow positivity into everything we do. Okay, so let me go back to sharing my screen real quick for everyone. I want to talk about 3 things this week, right? And those things are going to go as follows. Okay, we're going to talk about some Forex vocabulary. This is for the beginner session, of course. And each week, we're going to slowly add to our vocabulary, terminology. I'm actually going to show some things I look at on the chart, and I'm actually going to show you guys an awesome indicator that I have and utilize as well that actually helps beginners in the market, you know, and I'll share that for you in a second. So again, who are we, right? We're Trendz Nation, right? This portion is Trade the Trends, where success has no limits. We are here to enrich, empower, and educate others, you know, in the largest financial market in the world, you know, a $6.6 trillion a day market where money is up for grabs, right? Of course, the biggest money market is the market that's about money, right? Foreign exchange, foreign currency, all currencies, right? Whether it's Bitcoin, whether it's Ethereum, Ripple, if you're into crypto, whether it's the US dollar, whether it's the JPY, the Japanese yen, the Canadian dollar, the Mexican peso, no matter what it is, you know, we have the ability to trade it in this market. And this market is so impactful because guess what? The banks move this market. That's why they call this market the bank's secret, right? Like the banks have been keeping this for us because we want to know if the bank is moving money from different places, wouldn't you want to know where your bag is, right? Only way to secure the bag is to know where your bag is at, okay? So that's why it's so important. And the vocabulary we're going to talk about today are the candlesticks. All right, what are candlesticks? Identifying the uptrend and identifying the downtrend. So it's going to be very important, guys. You know, if you're seeing this live, you know, of course, you know, take notes. If you're seeing this on the replay, hey, take some notes. If you're seeing the recording in the comments, please put hashtag replay. Go ahead, give me a like. Go ahead, subscribe to the channel as well. So you can make sure if you can't make it on Thursdays night at 9 and you get off a little bit later from work or whatever have you got something going on, you can always come back to the recording and get this knowledge, okay? Because we're going to continue to drop this knowledge for everyone. So let's talk about candlesticks, okay? And basically the candlesticks, if you look at a chart, you see something that looks like this green and red thing right here, right? Of course. And basically they're called candlesticks, right? And these candlesticks actually represent time in the market, right? And on different time frames, each candlestick can be different. If I'm looking at an hour time frame, guess what? My candlestick is an hour in time. If I'm looking at a 30-minute time frame, the candle that forms is basically price in a 30-minute time frame. And of course, so on and so on. A 5-minute, you can go up to an hour, 4 hours, you can go up to a daily, even a monthly and a weekly as well. And I'll be able to show you guys some examples once I get on my trading view and actually go into marking up some charts here in a second. But on the left, we see the increasing, right, which is a green candle, okay? And this green candle means, and it's increasing because price opened low and it closed high, okay? That's how we look at candlesticks, okay? And when we're looking at candlesticks, you know, it's important to know, okay, what am I looking at, right? Especially when I'm looking at money and understanding those things. So on the left, we see an increasing candlestick, right? It's green. That means price opened low and it closed high, okay? And you guys can see these little skinny ends on them, and they're called wicks, okay? And basically what those wicks mean when that happens is that basically what was able to happen at that point is that, oh, let me make sure I get everybody quick mute check. Nah, I got you. Okay, so basically price opened low, price even went a little bit lower, right? So price opened here, right? It may have came down here, okay? It may have bounced all the way up this high, but it closed right here, okay? And this is called the body of the candle, right? This is the main place that it opened and closed. This is the body, and these are called wicks, okay, of a candle, okay? This is a bullish, right? Or increasing candlestick. You may hear the term bullish, and the term bullish or bull market means a up market, because how do bulls attack? They attack from low to high, right? Bulls attack from low to high, right? Now let's go over to the decreasing candlestick, okay? And this is where price opens what? High and closes low. Absolutely, right? So you're already probably starting to get it a little bit. Decreasing, this would be called a bearish candlestick. Why? Because bears attack from high to low, okay? And as you can see, price opened high, okay? It went a little bit higher, right? It went very lower than the closing price, but it closed right here, okay? And this is again called the body of the candlestick, and these are called wicks, okay? And of course, the more we look at this, the more we go through these tutorials and things of that nature, it's going to be even better, in that sense, because we're going to have the ability to make sure we look at things the proper way and actually see it. The more we look at it, we'll be able to see things in the market and be able to understand a little bit more as well, okay? So here I'm going to kind of jump over to a uptrend. And what is an uptrend? Basically, the uptrend is when you're going to see higher highs and higher lows, okay? And I'm actually going to show you specifically on my trading view, and I'm actually going to print it out, right? So you see we go up, right? We see we drop down, but it's not as low as a previous low. Let me see if I can get my cursor on it, right? So we see a high, okay? We have a low, okay? Then my next high is higher than my most previous high, and my next low is higher than my most previous low, right? And we see that trend happen: higher high, higher low, higher high, higher low. And with higher highs and higher lows, that dictates an uptrend, right? The market is going upwards, okay? That makes sense, right? And we see our candlesticks, okay? We see our green candlestick, which means price opened here and closed here, okay? There's a gap in the market there where price opened high, ended low, closed that gap, okay? Then it opened low, closed high. Next candle, open high, close low. Then we had a small pullback right there. Because one thing that we know about the market does not move like this arrow. It's not a straight line, right? The market is going to have pushes, then pullbacks, pushes, then pullbacks. A great example that I like to give out or say majority of times is, for example, if Tim runs a 100-meter dash, right? And after a 100-meter dash, Tim rests for 3 minutes, okay? Tim runs another 100-meter dash, he rests for 3 minutes, okay? Tim runs another 100-meter dash, he rests for 3 minutes, right? So now we have a trend. So I can hypothesize that if Tim runs another 100-meter dash, I'm probably about 90% sure he's going to rest for how long? 3 minutes, right? That's basically what we're seeing, right? We're seeing this push, then he rests for 3 minutes. 100-meter dash, he rests for 3 minutes. 100-meter dash, he rests for 3 minutes, right? So boom, next time I see a 100-meter dash, I kind of know I can sell for 3 minutes, right? Or whatever it may be. That's just the example that I wanted to give with this uptrend, okay? How to identify it and things like that. All right, so next we want to look at the downtrend, right? The opposite of basically what we was just talking about, okay? And how do we, acknowledge a downtrend? You're gonna see a high, a low, right? A lower high, then a lower low, right? So it's the opposite. Well, uptrends were higher highs and higher lows. A downtrend are lower highs and lower lows, okay? And we continue to see that pattern, okay? You can use the same example if we're talking about Timmy, right? If Timmy runs 100 meters, right? He runs 100 meters, it's gonna take a 3-minute break. Runs 100 meters, it's gonna take a 3-minute break, right? So, and we're looking at downtrends, so we're looking for sell opportunities, okay? And when we look for sell opportunities here, we're gonna wait for that pullback, okay? He ran his 100, right? It's 3 minutes, so let me sell, because after his 3 minutes, what is Tim gonna do? He's gonna run again, right? He's gonna run, so I'm gonna, you know, chase that bag right there. I'm gonna collect that bag. I'm gonna collect those profits, okay? Then I'm gonna be out of the market and then wait for another opportunity, okay? Some people could, you know, sell here, buy there. Sell here, buy there, right? If you're a scalper in the market, you know, that could be an option that's potentially, you know, good for you. Me, you know, sometimes I like to scalp. I see Josh on the line as well. Josh, he be scalping the mess out of that Nas 100. He's a beast at that joint, you know, but it all depends on your timing, your availability, and if you can scalp. Because scalping means, hey, you might be staring at your computer for the next hour, or that's probably what you plan to do, right? You plan to do that in the market, but hey, what beats working an hour and making, you know, maybe 20 to 50 bucks in an hour, you know, extra, right? You know, a lot of people don't even make $50 an hour now, right? And you could simply do this and slowly compound your account, slowly but surely, okay? And again, by me, the only way you lose is if you give up, right? I like to leave, you know, everyone a quote when I give some information, some type of value, because that's the only way you lose is if you give up, right? And if you want to bring it to the money markets, I tell people all the time, you don't lose a trade until you close it, right? You don't lose a trade until you close it, okay? Whether your trade is in profit or it's in drawdown or it's in the negative, right? You haven't lost until you close the trade, okay? Because the market could potentially turn back around, or it could hit your protector or stop loss to get you outside of the market, okay? And as I'm looking at TradingView, this is tradingview.com. It's free to sign up. I advise everyone to go ahead and sign up and register for free, right? It's probably going to ask you want to upgrade and all this stuff. Hey, you don't want to upgrade. We don't need all those tools right now. If down the road you choose to do that, you know, the more intermediate and advanced you get, that is a possibility for you to do. But hey, for what we're about to do right now and get our feet wet, hey, we're not going to need a premium package, right, guys? I don't even have a premium package. You know, I feel like I don't need it at this point. But right here, I have it as a line graph. I'm going to change it back to the candles so you guys can kind of see what those candles look like. Right now, I'm on a 30-minute chart. I'm actually going to take it to a daily to see what that looks like. As you guys can see, I've already been, you know, marking up UJ. And UJ is short for the USD JPY, which is the US dollar versus the Japanese yen, okay? And here, as you guys can see, this green light is current price, right? That's what current price is right now, okay? So just looking at what we're seeing, right? What kind of trend do we have, right? What kind of trend do we got? Anybody want to put it in the chat? You know, if you can recognize, is this an uptrend or is this a downtrend? All right, what are we looking at? All right, move this over for everybody. I need a mouse for this, Joan. My mouse set. John's right, a downtrend, right? Because you see your high, you see your low, you got a lower high, and you got a lower low, lower high, lower low. Well, it's not as low, but boom, she break back down here lower, lower high, lower low, right? Downtrend, right? We see that. I'm about to mark this up. I'm about to put an arrow right here, right? So you guys can see that, right? Downtrend, okay? Clear downtrend, okay? So right now, what we need to do is figure out certain zones in a market, okay? certain zones in the market because how far could this thing go down? When will it turn around, right? Will it turn around? Eventually, yes, it will. When things are going up, eventually, yes, it must come down. You know, like the old, like that old saying, you know, what goes up must come down, right? That's true. And what goes down in our market must come up also, okay? You know, so there's always going to be those breaks in the market, right? I'm doing everything by hand, but I'm actually, you know, go over our indicator that we have that's actually going to almost do all the work for you once I kind of break it down. Like I said, I'm on a daily chart, and what I want to look for right now is support and resistance. What is support and resistance? Support and resistance are high and low zones in the market, what that the market respects, right? That it either bounces off the zone going upwards or bounces off the zone going downward, okay? And I'm gonna quickly show kind of what that looks like. And I know Josh, I know he does a lot of his marking with the line chart because it's a little bit cleaner, especially if you're a beginner. But I'm on the daily. Okay, right now, I'm just kind of looking at zones where price has respected, okay? Respect zones, okay? I'm not sure what's going on there. Let's come back. Let's come back, right? And just simply looking at the 3 zones I just created, the reason why I did that, and I'm gonna kind of show you guys here, right? We see respect, right? I want us to see respect. Boom, okay. Respect, okay? So like I was saying here, we see it resist, right? Or we see a ceiling in the market. And anytime something hit a ceiling, it does what? It bounces down, right? If you throw a ball at the ceiling, it's going to hit the ceiling and come back down. Boom, that's what we saw. Boom, we saw that. Hey, we saw a breakthrough, right? Fake out, breakout, boom, right? And then, of course, we see it here. We see it, the test here, about 1, 2, 3, 4, 5. And then even, you know, a little bit later, even a month later, right, we see it come back to that zone again, okay? And now let's look at this zone right here, right? We saw respect that zone. It bounced off that zone, okay? This was a floor. Boom, hit the floor again, boom. Oh, now we break through the zone or break through our market structure. And now that zone becomes a ceiling. It's no longer a floor. It's a ceiling now. Boom, it breaks through, right? We see it respecting the zone. It ain't really going crazy. Boom, we see it break through, hits it again, right? Resistance. Anything hits the ceiling, gonna do what? Boom. Anything that bounces off the floor is gonna do what? Bounce up, okay? Right? And again, not trying to give y'all too much in the beginner phase. Of course, I like to always, whether you've been trading a long time or new to trading, it's always important to always come back to the fundamentals. And that's what I had to come back to, you know, especially when I'm trading. And, you know, I've been doing so well trading, I stopped learning, right? I stopped educating myself. I wasn't in the live sessions like I would be. I wasn't in my academy like I would be, you know, sharpening my skills and make sure my skills stay sharp. Basically, I got a little cocky, I want to say, you know, having a day where I made $700 in a day, right? Got a little cocky, right? And when you get a little cocky, you're going to get humbled. You're going to lose 300-400 of that, right? Right? I'm still up 300, right? But because I didn't go back to my fundamentals and discipline, hey, the $700 profit, I cut into that profit and it's only a $300 profit. And it should have been 700 plus, right? So that's important, right? Support, resistance, learning the zones, and those are going to be terminologies that I'm actually going to come on with and talk about next week about support and resistance. Again, let's always come back to the fundamentals, okay? I'm going to get into this indicator, but let's continue to flow into the fundamentals. Josh, I definitely been made humble, right? We all have, you know, because we're human, okay? And human nature is going to kick in. We're going to get emotional. Because we don't like losing money, right? but we also want to get into a spot where we want to maximize our profit potential as much as possible. Okay, that's going to be important as well. Let me see something here real quick. Give me a second, y'all. Just want to make sure. Mute. Bet. All right. Cool. All right. So again, we talked about what is a candlestick. So I said a candlestick is also a period in time, right? So I'm on a daily chart. So that means each candlestick is how long, how much time. It's a day on this chart, okay? Let me see if I can zoom. I want to zoom in a little bit. All right, so let's zoom in. So this candlestick is a whole day. This is how far the market moved in a day, the next day, the next day, yesterday, and this is currently today. Okay, currently today. This is what the market has been doing today, right? This is what the market did yesterday, right? Being that the US dollar, right, is an election is going on, US dollar is weakening, right? So the JPY is strong. So I would have sold USD JPY because my first base in this pair is the US dollar, right? So I'm buying Japanese yen in favor of the dollar, right? In this case. But because USD is first, I'm calling it a sell. I'm selling the dollar, buying JPY, selling the dollar, buying JPY. And look at it, right? Let's see that move yesterday. If you'd have caught just this one move, what is that? Oh, let me see. Man. Oh man, don't acting up on me. We go back to my gene here. Boom. That is, guys, that's almost 100 pips right there. 100, almost 100. Boom. Okay, 113 to be exact, right? And what is 100 pips? Right? Let's talk about it, right? Because we haven't got to that terminology just yet. A lot of us know, a lot of us don't know, but that's what we're here for. So a pip is a price interest point, and basically that's how we measure our money. And we can actually leverage certain amounts of dollars per pip, right? So if you're a beginner, right, we're starting off at 10 cents per pip, right? So if I'm risking 10 cents per pip and I make 100 pips, how much money did I make? Right? I just made $10, right? 10 cents just went to $10 on this trade, and it would have taken me a day to do it, right? That's cool. A lot of times we'll put our trade in, put in our stop loss, right? So if it goes the other way, right? If it breaks market structure going the other way, I want to get out because now it's going the other way, right? So I want to take a small loss, which is usually, in this case, I'd say about 20 pips. So I'm risking probably about $2 to get $10, right? Not bad. That's a 1-to-5 ratio. Okay, so that means when I win, I 5x. When I lose, I'm negative 2x, right? So that's how you compound with proper risk management. So if I take 3 trades, right, I can actually lose 2 of them and only win 1 and still be in profit. Why? Because on the 2 trades, I lost $4. On the 1 trade, I won $10. So 10 minus 4, I'm still plus $6, right? That's where proper risk management comes into play, right? What happens with us a lot of times, especially if we're on a roll, boom, we want to risk more, right? We want to leverage more, I would say. Or when we just lost money and we're trying to make our money back, or what I like to call revenge trading, right? Those things are no-nos. So what I've been able to do is actually discipline my disappointment in the market. So just like how I make $700, I have the same feeling if I lose $700. Okay. And I don't want to lose $700, trust and believe, but you have to, be able to discipline those emotions, right? Because those emotions can have you in the market taking L's. Like I said before, hey, we're in the market now, and guess what? I'm up, cool. Hey, I knew this would happen, right? I'm studying. I understand my strategy. It's important to stay on top of that, right? Hey, I'm revenge trading. So now I'm upset, I'm mad, I'm a little bit angry, right? So I'm not looking at the market as clear as I should be, okay? And that's why it's always important to actually start a strategy, right? Go over a plan, utilize our 2-week syllabus. That's why everyone who's on the Epic Trading, with Trendz Nation, we have that 2-week syllabus. We have those live sessions, with our team pros, that's 6 and 7 figure earners, right? We have those pre-recorded videos of 60 plus hours of basics terminology, all the way up to intermediate Fibonacci's and even going to market structure and price action, breaking that down for you. And then also this indicator that I'm about to actually proceed with. Guys, and I know I have everybody on mute, but if you have questions, feel free to put those questions in the chat. I can actually, see the question, or raise your hand, if you want to come off mute and ask a question by chance. But what I'm about to do now is I'm about to actually bring up this indicator. Oh, I was marking up, man. I told y'all UJ is Bay. UJ is Bay. Let me see if I got anything else marked up on this bad boy. Yep. Marked all that up. Like somebody rolling the screen. That's cool. I don't think that was me right there. Nah, somebody else might have did that on accident. Got y'all. All right. So basically, what we have with Epic Trendz, as I want to call it, we partner with Epic University because we know a lot of people want to learn the skill set of trading, right? We want to make it accessible and affordable. Okay. So we partner with Epic Trading because they gave us both of that. And it's phenomenal. Like I said, to have live sessions 3 times a day. You know what I'm saying? I know you can't make them all, but if you can just get to 1 a day, for you, that's what, 4 to possibly 5 live sessions a day. If you're on the 9 p.m. Asian session, unfortunately, there isn't one on Friday because the market closes at 5 on Friday. So you will have 3 sessions at 2 a.m. Every day, Monday through Friday. And you will have your 7 a.m. New York session Monday through Friday, and your 9 p.m. you will have Monday through Thursday. Okay. Hopefully that makes sense. Let me go back to the chat. Said, can you just go over the open and close on each different candle? Absolutely. So quick example, and hopefully this is answering it. So I'm going to kind of break this down. So right now, as stated, I'm on the daily chart, right? So that means each candle represents a day in time, okay? When the day started, this is where it opened. When the day ended, this is where it ended, right? So I'm going to start at this red one, this red candle here, and I'm going to use my brush, right? Boom, we're going to start right there, okay? Because this is where market opened that day. And what day is that? I'm going to tell you that was October 21st. This is where market opened. Market opened at 105.54. Okay. During that day, it opened high, but guess what? It closed low, right? So that means this is a bearish or bullish candlestick, right? From high to low. What attacks high to low? A bear. So this will be considered a bearish candle. Okay. So basically it opened at 105.54. How do I get that number? I put my line here and it comes up green. So I know exactly where price is at that point, right? So basically what that means, that price 105.54 is the exchange rate, right? So that means to exchange US dollars for JPY, I need basically $1.55, right? $1.55 equals 1 Japanese yen. Okay. So basically what it's saying now is that because the value of the dollar is going down, right? At the end of the day, for 1 Japanese yen, I only need $1.45 instead of $1.55. Okay. The price just went down. Okay. So I would place a sell here, right? If I'm watching the market, because we see the respect, we see the zone, right? Oh, I see it respect that zone. It touched this zone again, right? That's showing me that it's been a ceiling. I'm gonna sell. Excuse me, should have got some water. All right, so let's see here. So from that position down to this position, that was how much? 96 pips, right? So at 10 cents, you would have made $9.66, right, on this trade. Those are the possibilities that we have in the market. And is that, Roy, is that exactly what you wanted to see? Hopefully I answered that. Just let me know in the chat. Damn, I should pour some water out here, boy. Some Gatorade or something. Right? Just getting through it, getting right, getting tight. And of course, if you ever want to go back to this, I do record these and post them on my YouTube. So definitely I'll make sure you get the link to the YouTube as well. So you can come back and study. Like I said, I love to give all the free content I can give out. And the reason why I give out free content, like this, is because, people are so intrigued with trading. But of course, trading is so, intimidating certain times. Said, yep, okay, good, cool. Right? But it's so intimidating. A lot of people don't start or invest money in education because they feel they want to know a little something, right? You want to be a little bit more confident when you're going to spend some money, right? Even though it's cheap, right? You're still like, I don't want to waste money. No one wants to waste money or lose money, right? And that's the key. But one thing about trading, the disclaimer is that, hey, you potentially can lose money, right? You're not going to win every trade, right? Even the greats don't win every trade, right? What they do is proper risk management, like I was saying, right? I can do 3 trades with a 1-to-5 ratio, and I can only win 1 and be in profit. I can go 1 for 3 and be in profit. Right? That's crazy, right? It's almost like the batting average, right? In Major League Baseball. Hey, they only want you to bat 300, right? They only want, out of 10 at bats, I only need you to get on 3 times, and they'll pay you millions of dollars to do that. You see what I'm saying? We can make the same money here. Well, we're going to start off a little slower, right? I know we all don't have $1 million to start off with, but hey, we can compound the account with proper risk management with a proper ratio. Okay. And that's what it's about. Because what would happen is, say I do those 3 trades and I'm like at a 0.01 or 10 cents. I'm like, man, if I would have had $1, that would have been instead of $9.66, at 10 cents, I could have risked $1 per pip and made $96, right? But that all depends on your account size, right? Because again, you're not risking $2 anymore either. You're now risking $20 if it goes the wrong way. Okay, that's what I'm saying. So, and if you have like a smaller account between $100 and $200, and if you risk $1 per pip with a 20 pip stop loss, and you lose $20, you've just lost over 20% of your account instead of 2%. Right? That's the thing. 1 to 3%, maybe max 5% per trade. So you can always stay in the game. Proper risk management, right? We're not gambling. This is not get rich quick. We're learning a skill that's going to help pay us for the rest of our lives. But again, we must be disciplined and consistent in doing so. All right. So what I'm going to do now is I am going to bring on this indicator. I am logged in, so I should have access to it. 1 second. Ooh, invite only scripts, that 20 pip and dip, guys. And this is only for our Epic Trendz team, right? Because like I said, not only do we have the academy that's available, the live trading sessions, the signals where our pros send us their trades that we can copy and paste, as well. Multiple times a day, beginner, intermediate, advanced level stuff. We do study halls, different things, multiple study halls daily. Just so much value. And we also have this indicator for beginners. Okay. And what it does, it basically, look at it. I told you how to find the downtrends, right? Lower highs, lower lows. It does it for you, right? And let me get these lines out of here, right? It does all that hard work for you guys. You guys see, I use the naked chart to identify that, right? But with our indicator, the indicator does it for you, right? It finds it for you. And it also finds the support and resistance in the market as well. right? Already for you, right? You don't have to mark it up yourselves. It already presents it for you guys. And if I had this indicator when I started trading 3 years ago, I would be 6 years ahead of where I am now. And now we have the indicator, and with the education that I have, now I can utilize it and get more in the bank, right? So look, I told y'all sell. Look what the indicator told me, sell. You see what I'm saying? And this crazy because I'm sorry, y'all, I had to laugh because, you know, it just shows how better I'm getting, you know, and I say better because we can always get better. No one knows it all, right? Always continue to strive for more and get better. You know, any chance you can, always continue to get better. But looking at it, right, it tells me right there, sell, okay? And guess what we do? We sold. We would have got them 96 pips, right? And again, this is a 20 pip and dip indicator. I only need 20. I'm only trying to get 20 of that, right? I only need to get a dub. Because with 20 pips and you compound, like I said, that's $4 here, $4 there. Now your account is $8 higher, right? So now that 1 to 3% of your account gradually grows like a snowball, because 1 or 2% of $100 is what? $1 to $2. 1 or 2% of $200 is now $2 to $4, right? 1 to 2% of 300 is now $3 to $6, right? So you guys can see it slowly compound, slowly but surely, right? And Warren Buffett said, or someone asked Warren Buffett, why don't a lot of people utilize your strategy, right? And Warren Buffett said, because people don't want to get rich slow. Everybody wants to get rich fast, and that's why a lot of people, you know, will get involved with certain things, $100 to $800, where you give somebody your money in hopes that they send you $800 back when everybody pays a pool or whatnot. No. You know, we're gonna sit here and learn a skill that's in our control, where we know how to fish and we can go get it when we need to. Okay, so. As I was stating, it tells you your sales and your buys. And this blue line right here is what we call the 50 moving average, right? I'm not going to spend too much on the moving average because it's in our Epic University, you know. So, you know, if you're new or not involved just yet, you definitely want to make sure you get access to this university so you can learn all of this at your leisure, your time, where you can get ahead or you can go as fast or as slow as you feel necessary. Of course, but we see this blue line, 50 moving average, and what 50 means is that this moving average is based on the last 50 candles, right? So the last 50 candles, this is the moving average, right? As you guys can see. So it's moving downward because the last 50 candles have been doing what? Moving downward, right? And another confluence or confirmation that we have about this 50 moving average is anything below the moving average. If price is below, I'm looking for what? Sell opportunities, right? Because it's just going to confirm my sell, right? Just like we saw here. We got the sell indicator. We got the indicator that came up, says sell. We're under the blue line, right? So it confirms sell. Boom, we're in. Okay. See here, we got a sell that is above the blue line, which is very aggressive. Okay. Because here, price could still possibly break through. So what we will see the sell, if the next candle closes below and opens below the 50, we would have entered right here, right? That would have been a sell opportunity. Boom. Next sell opportunity. Boom. Next sell opportunity. Although it bounced back, we did what? Sell. So makes sense? So these green right here, this is going to be our floor or our level of support. Okay. This is where market supported and bounced up, supported, bounced up, supported, bounced up. Red is going to be our resistance, where price went up, hit this resistance and bounced back down. Hit, resist, bounce down, resist, bounce down, right? And this is how we're able to trade market structure, okay? A little market structure right here. And like I said, if you're new, please believe and understand you're not going to learn how to trade in one 30 or 45-minute session. This is going to be continue continue education, even for myself, who's been doing this for 3 years. I still study, right? Of course, I attempt to teach and educate and train, but I continue to study, right? Because I can continue to sharpen my skills as well and continue to do that. How do you know when to enter a trade correctly? Kind of a trick question, in a sense, because everyone is going to enter differently, right? But with the 20 pip and dip, like I said here, you just want to have your confirmations, right? And Josh, you've done a great job of this, of course. So 50 moving average, right? Where's price? Is price above or below? Price is below. Okay, so I'm looking for a sale. Okay, so basically I have my support resistance. Of course, I would actually have my own lines up here too, right? I would have did my own as well, and they probably would have looked just like this because that's that zone right here. Let me show you. Where's that box? Let's see, where can I get the Jones said I need them boxes. We up here in patterns? No, where are we? Boom, I think we right here. Geometric shapes. Boom, there we go. All right, so you can see this the full zone right there. We see it, right? Support. Okay, boom. Here's this zone. Oh my goodness, she bounced. Hit this zone. Oh my goodness. Hits this zone, break up. Then we got a break of that market structure, right? So anytime we see that support happen and we see a breakthrough, usually means market is continuing to go in that direction, right? Because it resisted there 3 times, right? Boom. But that 4th time it broke through. Would I enter this trade straight on a breakthrough? No. Why not? Because I need a confirmation that is going in that direction. And basically what I would do is, and I wish I could move these little things right here because it's like they blocking me. I don't know what these, move them little Jones. Can't move them. So basically what would happen is as we broke through, okay, candle closed, looking for this candle, right, to also close below that zone as well. Because it's possible this could come down and this could break right back through, okay? But if this candle closes as well under, it confirms that now I'm going in the downward direction, and it's not going to fake out and bounce back up. Then after that confirmation, I would sell. I would enter a trade, right? And that's just me, right? A lot of people have more risk tolerance. Maybe you want to see another candle close to have a additional confirmation, right? Especially if you're looking for 20 pips, that's possible. But of course, you don't want to overthink it and miss the move also, okay? So as we were up here, what I would see is, okay, I see the sell, right? Candle open, boom, it says sell. And it's probably still up in here somewhere, right? Would I sell? It's below the line, yes. Okay. I got the sell confirmation, boom. So guess what? I'm going to sell and my take profit will be this zone. Why? Because it's support. It tests that zone, right? So I'm probably about 80% sure it's going to at least come to the zone just like it did. Right? Because that's what we've seen so far. That's been what's been happening. What are the best exchanges that are best paired together? Well, again, I mean, because you can trade anything, to be honest with you. It's all, again, another kind of trick question, kind of how we talked before on the phone is it's all about what pair is going to be best for you to trade based on when you can trade, right? Because I may like USD JPY, right? But because you may be at work that time, you can't trade USD JPY, which may be the best time between 8 and 1, right? But you get off at 6, right? So you can trade at 9, right? So the Asian session may be a little bit better for you. So you might want to trade USD, Swiss franc, right? But you could trade any pair. That's why I was went into, based on your time frame. And again, in our academy, we go over, the best time to trade certain pairs. So if this is your time to trade, these are the best pairs to trade. And at that point, you can say, hey, you know what? I'm gonna try USD CHF, which is a Swiss franc, USD JPY, and I'm gonna focus and educate myself, mark up these over and over again until I start learning these patterns, right? Because once you learn it, you understand history repeats itself. And that's why I'm, again, on USD JPY, because history did what? Bounced up, it did it again. It repeated itself, right? One time, almost here, second time, third time, right? And for example, with this, you could have actually got into another sale, to be honest with you, right here. But we wait for that confirmation, of course. Wait for that confirmation. So, Josh, hopefully that answered that. If not, let me know in the chat, or if I need to do it again. I ain't got no problem. We still got about 5 more minutes. Y'all, I am dog tired, y'all. And I still just wanted to put on, I like to be consistent. That's kind of why I cut down to Tuesday and Thursday, just for the simple fact that I wasn't able to, have time for my education. I definitely cherish my team, and I want to make sure that I can, again, help and train, but I believe I can't help and train you guys if I'm not continually to learn, if that makes sense. Yeah, no problem, Chief. And if you're on Facebook too, look for me on Facebook, Travis A. Jones. And I can add you to my Facebook group. So all the info, updates, and sessions we can put there. And of course, I can actually show you the academy that we have, all that good stuff. If you want to take your trading, once you get comfortable with the basics, if you want to take your trading to an intermediate and advanced level, hey, you're going to want access to these live sessions that we got, from our traders, and also the academy, to always be able to have something to sharpen your skills. Because every Thursday, I'm good and all. I'm a good trader, of course, but hey, we connected with pros. And Josh could tell you who else on here. Josh, I know Desiree was up here. Anthony's up here, bro. Tony, my guy Tony's up here. They could tell you, like, yo, it's it's legit, and they're sharpening their skills as well. But cool. All right, so right there, we're going to end it. Of course, again, same bat time next week. I always wanted to say that. The original Batman with Adam West, I know it's like old, but my dad used to watch it, and I used to love that thing. But same time next week, Thursday, 9 p.m. Eastern Standard Time. This is what we do. This is how we do it. We're going to have some more terminology there as well. So stay tuned for that. And feel free, again, to reach out. You got my number as well. Shoot me a text. And, any questions you may have, I can add it to the repertoire for next week. And that's what we can go over, right? And, of course, it's free. Get everybody, on these free sessions, right? Because a lot of people have, I know there's so many courses out here, $200, $300+ like I said, we make ours affordable. So you're going to pay probably half of that, to learn, and you're going to get even more value, than anything, because of our community, our support, myself included, joining our Epic Trendz community, our study halls, things like that. So important. And I know a lot of people have kind of, seen those $300, $400, like, man, I don't have $300-$400. So get people as much information as they can for free. Tell them about these live sessions, get them on, tell them to tell a friend as well, so I can continue to, do this. And if there's any time you want to, I know it's free, but if you want to donate so we can continue to have, some good stuff, hey, I take a cash app, you know what I'm saying? Things like that, so I can always continue to add more material, things like that, to share with everybody. But again, no pressure, anything like that. I just love to offer value. If you feel the need to give at a later time, I'll probably introduce that. I don't know when, but I may introduce that. But right now, we just learning, we earning. I want to see everybody at the top, y'all, because it's the bottom that's way, way too crowded, okay? Y'all enjoy the rest of y'all night. I appreciate y'all tuning in. Next week, let's have about 50 people on this call. So everybody that's on here right now, tell 10 people, have them tell 10 people, who want to learn and earn and get this terminology and start to learn the basics of trading. Next week, I'm going to talk also about some weed stocks as well next week. I want to show y'all something as well. I want to talk about gold, right? Didn't talk about, not gold, but silver. I want to talk about. I don't know if y'all can see that, but guys, exchanging your dollar for silver, guys, because silver and gold are precious metals that actually increase in price. So basically what I did was I exchanged my decreasing dollar, because we know the value of our dollars ain't worth as much anymore, for an asset that can potentially continue to increase in value. And gold and silver has only done that over time. Why? Because the value of gold and silver only increase because it's something that can't be made. It can't be duplicated, right? A dollar can be created, right? That's why a dollar's value is decreasing, because the Federal Reserve and Congress or whoever have you, this monopoly they've created or whatnot, can just create them out of thin air, so that dilutes the market, right? So it's important to think about different things in that Trendz Nation. We don't just trade. We trade. Of course, if you follow me, you saw my stock investments, my weed stocks, crypto as well. Bitcoin just hit 15K. That made me over, I think, $60 just today. But within the last week, I'm not sure. 60 a day, around 40 a day. So maybe about $200 increase. That account just hit 3K. My stocks just hit 1K in that account. And I don't even know what my crypto look at in my Binance stuff. So I got to look at that. I'll be forgetting about that. That should be like $300 in there too. But again, in silver, now I'm exchanging, I'm taking withdrawals of profits that I'm getting in US dollars and investing in other assets. And basically my goal is to, build a portfolio for my kids as well. Like my kids, my two youngest, my kids, they have Bitcoin accounts already, where, they're already growing money. They don't know it yet, but they're already growing money. And I'm buying silver for them as well. So that's something that we can continue to pass on. Same thing with buying gold as well. Like here is about 0.02 grams of gold. And people think you got to buy it in bulks. You buy an ounce and things like that. You don't have to do all that, man. Got you. Where do you get your silver and gold from? Cool. Matter of fact, I'll send you the info so you can check it out. It's very nice, very efficient. It's awesome. Like I said, very discreet shipping and all that right to your door. But I'll shoot you that link as well in a second, Roy, once I get that up. But all in all, again, appreciate y'all. Enjoy y'all night. Continue to, study even outside of this Thursday class. Continue to research. Continue to question. Continue to write things down. TradingView.com. Start looking at charts. Just start practicing. Start doing something, right? A lot of times you learn by doing. So just go out there and let's do something. Let's help each other doing it. And let's make this money, y'all. So enjoy y'all night. Again, boom. Definitely going to link. Absolutely. So you got my number. I actually be in the city next week. So Josh, I'm going to be down there next week. I'm being in 7-5 next week. I don't know if he's still on, but I know me and him also link up a lot down there too. So I'll be in the 7-5 next weekend. We're going to link, some hands-on stuff, get everybody up and rolling. If you want to join our academy, get you in there, get you your 2-week syllabus so we can get your plan right. Get you on a 90-day program plan, I like to say. Go hard 90 days, and let's start making this money, y'all. Y'all enjoy the rest of y'all night. Peace.